of earning sentiment, turnaround, recovery, all of that seems to be playing out on two-wheeler stocks. And that's one of the first elements that we'll focus on today. Let's bring in Sudarshan, because in the morning he was flagging off how Hero's numbers, at least the monthly sales numbers, are looking good. But it seems it's not just Hero Moto. A couple of other two-wheeler folks have been doing well. We just saw Ather's numbers. At least optically, they look good. So two-wheelers all revved up, Sudarshan?
We are starting festive season this year very early in the month of August only, and the last monthly sales that these companies have reported for July. So sales for most companies were largely in line or slightly better than its estimate, especially for two-wheeler names. They have outperformed by wide margin if you talk about the two-wheelers versus passenger vehicle sales. And amongst major outperforms, two names in the two-wheeler space were TVS Motor and Hero MotoCorp. But overall, if you talk about both domestic segment, if you exclude Bajaj Auto, all the companies have seen a healthy growth, and that growth was in the range of 19 to 25%. Export for all the companies have seen a big growth, and that growth range was 28 to 95%. Two companies, TVS Motor and Bajaj Auto, for them contribution of export and domestic is almost in the similar line. As far as Eicher Motors and Hero Moto is concerned, the contribution of export to total sales is very minimal. So for Royal Enfield, export growth was 95%, but contribution to total sales is just 13%. So that impact is not that much. Now, what about the outlook? Festive season is approaching, and one segment that is expected to do well is the entry-level segment. And two of the major players in this segment are Hero MotoCorp and TVS Motor. So even in the commentary, Hero MotoCorp is saying that retail demand has been stable, and now with festive season approaching, they are expecting volumes to improve. So that's the reason you are seeing a big move in all the names. Hero Moto is up more than 3%. It's almost the same for TVS. Bajaj Auto is up almost 2%, and even Eicher Motors is up more than 2%.
Thank you very much for that. Let's just get in a quick word from Gurmeet on the numbers. Gurmeet Chadha is also joining in.
Yeah, hi, Rima. As I said, and I agree, I think rural surprisingly is doing better. And this is not just for Q1. We saw that even in Q4. Even if you see the TVS numbers which came, they were pretty good, pretty solid. TVS is more of a bit of a turnaround story also in terms of capital allocation, margins, the iQube story on the EV side and presence in different terrains. I think even if you see the M&M numbers, that pointed to a broader recovery in farm equipment and tractors. And today we saw Escort, Abota also, showing some margin increase. So I think, and this is the data we've been discussing, that whenever monsoons are 5% above normal, the agriculture GVA tends to be around close to 5%, which has been around anemic 2-3% now for almost 2-3 years. So always good news as well. I think the only thing which is now concerning the market is more urban consumption. So rural is actually making a bit of a comeback. Early signs, but pretty positive.
Okay, so we need good news, and maybe some is coming in, like Gurmeet is saying, on the rural side at least. Some of these two-wheeler guys have been reporting pretty decent numbers. Speaking of consumption, is there, further light at the end of the tunnel? Well, we've just heard from Marico a while back as we were coming in for closing bell. We've got Manglam joining in. Manglam, what, 9% volume growth? Doesn't look bad, right?
9% is the highest that we've seen among the large companies that have reported when it comes to Marico's volumes. But importantly, remember, the street was prepared for that, and which is why, the stock is holding on, and it was at close to 52-week high before numbers. The street had already sussed out these numbers from the first quarter update that the company has given. So largely in line. If you look at it, the revenues, 3259 crores. The street was working with a number of 3270 crores. Volume growth at 9%. The street was working with a range of 8 to 9%. EBITDA at 655 crores. The poll was closer to 665 crores. No problems out there as well. And net profit around 500 crores as well. Largely in line. The only thing we need to watch out for going forward are the margins. Why do I say that? Because gross margins declined by 530 basis points. There's been a sharp inflation in, their key copra prices, 18% quarter on quarter, over 100% year on year, and that will remain the key monitorable going ahead. Parachute rigids declined volumes by about 1%, and this after a 31% revenue growth, telling you how raw material prices have had an impact on their main business. Value-added hair oils grew well. That was a positive. Saffola also saw a mid-single-digit growth. So what is it that led the volume growth this time around? It was foods and their new businesses. The company has been diversifying in the past itself. What they've said is that the impact of unprecedented margin headwinds will peak out in the first half, and the second half we will see margin improvement. They will sustain positive volume and revenue growth momentum through the year So demand from a top-line standpoint, no problems. Margins remain the key monitorable.
Interesting. Foods business for Marico. Mangalam, before we let you go quickly, since we're on the subject of FMCG, and I remember you said green for ITC in the morning, despite that huge margin decline, right? Stocks actually showing a shade of green right now. Again, the read-through in terms of just overall growth and pickup, is it positive from ITC as well?
It is a positive from the ITC management as well. They've said that urban consumption has seen signs of recovery. In fact, across the board, right from HUL to ITC to Marico to Dabur as well, said that there has been a pickup in urban recovery, even as rural remains resilient. The more important part is the next couple of months look a lot better from a demand standpoint, largely because one, monsoons have been good, so rural, there's little to worry about. And the steps that the government has taken with regards to spurring consumption have also, some fruition to bear over the next couple of quarters. The only monitorable from here on would be how the raw material prices pan out, but that sort of volatility and margin compression may perhaps be in the price given the underperformance that we've seen from the FMCG stocks. So which is why top-line growth is something that the street is factoring in, and that's what has caused the FMCG index to actually rally about 12% from lows as well. For ITC in particular, the margin miss came in on account of high inflation in leaf tobacco prices, which the company believes that this season has a lot lower prices, so they've exhausted their high-cost inventory. Going from here on, margins are likely to improve in the tobacco business, so that's a positive, and that's what the street has taken forward as well. Cigarette volume growth of upwards of 6% is at a multi-quarter high. So the top line, more important than the bottom line.
Absolutely, take that point. Thanks very much for that, Mangalam. Very quickly, Gurmeet. So like you said, there are signs of rural recovery picking up. The question is, which stock will you play through? Some of these FMCG names, two-wheelers, something else. What are you buying?
So, if you see in FMCG, for example, Emami and Marico reported good numbers. Tata Consumer was, I think, slightly above average. Even in Marico, if you see now, the food business crossed 900 crores last year with like a 30% plus growth. This year also they are talking of 25% growth, and largely led by Saffola, Saffola oats, soya chunks, etc. So there's a bit of a difference happening. Companies in BPC, more in skincare, they are facing a lot of competition from a lot of startups and local players. And companies which have a better food business and more rural reach tend to do better. So got to differentiate there. So we are looking at Tata Consumer and Marico in terms of FMCG names. We've added some fertilizer stocks, some crop protection names like Coromandel, fantastic set of numbers, continues to do well, industry leading margins. We have M&M in the portfolio. We are also looking at in terms of some two-wheeler ancillaries, both two-wheeler and four-wheeler ancillaries in the portfolio. So this is where we are paying the rural recovery. But in general, if that market recovers, it has a broad-based cascading effect overall, because urban consumption, in my view, can be fixed earlier. Rural is more difficult to fix.
Okay, let's now talk about ABB. That's been the sore point today. It slipped in trade after reporting a weak set of numbers. Margin contracts, order inflows, all have come under pressure in the first quarter. Vamakshi joins in with the details.
Well, Rima, a weak set coming in from ABB this time around. Keep in mind that the revenue saw an uptick of almost 12% on year-on-year basis. This is more or less in line with what the street was anticipating. But operationally, it has been a very, very weak quarter for the company. Keep in mind that the cost of goods sold were up almost 21%, outpacing the growth in the revenue, which is why the gross margins came under pressure, down almost somewhere around 462 basis points. Apart from that, the EBITDA margin too saw a sharper fall of almost 600 basis points. Keep in mind that this time around, there were some forex losses as well as some one-time expenses given a project execution topic, and therefore, the margins came under pressure. But the management said that if we keep this aside, the margins could have, adjusted for these one-offs, could have been at around 16 to 17%, which is still low as compared to the 18 to 19% that they've reported in the past. The net profit this time around declined by almost 21%. Let's look at how the different segments performed as well. The robotics and discrete automation segment saw the highest growth so far, 180%. This has outpaced what the street was expecting as well. On the other hand, electrification did decently well, slightly above estimates, but motion and process automation have come in lower than what the street was anticipating. The ordering activity too was quite weak. The order inflows have declined by 12% on a year-on-year basis. This is only the second instance that we've seen in the last 10 quarters where the order inflows have actually declined for ABB India, so that's important. And the order backlog, on the other hand, saw an uptick of only 6%. The order book now stands at 10,064 crores. Now, what they've also said is that the board has approved appointment of a registered valuer to carry out valuation of the robotics business. They have given a nod to incorporate a wholly owned subsidiary which will house the robotics business, and no decision has been taken on the divestment of the robotics business to the parent company or any third party. Overall, a weak set of numbers, commentary coming in from the management also slightly tepid, and resultantly the stock is out in trade today.
That there is a delay of decision making in the process automation area, and also around this year we had fairly large orders in the traction area from railways and in the metros specifically, so which is not matching in the same quarter. So on a relative basis you will see there's a decline there. So otherwise we find that the market at a base level is pretty solid and robust, but at the same time there's a sluggishness in decision making at this point of time.
ABB follows a very sort of a conservative accounting standards, and we took all the impact on the P&L. So I think that was 56 crores, and the other one-off which we took on account of an project execution topic which we need to deal with was 39.5 crores. And I think if you adjust to this, we are in that range of 12 to 15%, which we already mentioned. EBITDA margin, you could add another 4.5% to that, and we would be there around 16-17% over there.
That's the word coming in on ABB. Gurmeet, is ABB, I think the company also spoke a little bit about robotics and how they're incorporating that. But Gurmeet, any thoughts on ABB? Is that a part of your portfolio? Are you looking at it?
Not currently, but as I said, any miss, because the stock is very richly valued, almost 50 times EV by EBITDA, almost 55 times on trailing basis. Any miss, there will be some reaction from the market. I still think 5% is not much, but in case there is more correction, happy to look at it. I think as your colleague pointed out, the big trigger could be some unlocking on the robotics business side, and that part of the business also seems to be doing well as far as the quarterly breakup is concerned. Right now we are more positioned in L&T. We have some power equipment names like in rectifier, and we are tracking a few more names, in power equipment space. That's the space we are anchored to as far as capital goods is concerned.
Okay. All right, Gurmeet, shorter conversation today. So many earnings to go over, right? So quick one today, but thank you so much for joining us this afternoon. Well, with that, let's move on. By the way, I think Shree Cement numbers also flash. We'll get them back on the screen from first glance. It seemed like the volume number was a little lower than Nigel's estimates. We'll get back to it in just a minute. But we do have Nimesh now joining in. He's been taking a look at the latest view coming in from Morgan Stanley. Rhythm Desai says he's still very bullish on the market. Nimesh, thanks for joining in. So Rhythm, I think, is this day and age's biggest bull on India, right? What's he saying now?
Well, absolutely. And again, in this current environment of such a big gloom and doom, with so much of uncertainty with regards to US tariffs and everything, to come out and say that expect re-rating of Indian equities, which is on the anvil. That's the headline from Rhythm's note, and he says that get ready for new highs in months ahead. So that's a real bold call coming in from Rhythm Desai, and he's been bullish, as you rightly pointed out. Now the rationales. Now the key rationale is he believes that the immediate prospects depends on the confidence of growth cycle, and there Morgan Stanley is little ahead of everybody else and ahead of the consensus as well, and they seem to be quite confident that this is going to come. In fact, even on the earnings part, while we've seen a soft patch in terms of earnings starting from second quarter of FY25, that he believes is coming to an end very soon, and market is not yet pricing in. So the big thesis of being bullish is that he expects big earnings upside from coming quarters. So that's a key call from Rhythm Desai. Now in terms of sectors where he's bullish on, his biggest bet is on domestic cyclicals compared to defensives and external facing sectors. In terms of sectors where he's overweight on financials, consumer discretionary and industrials. Otherwise he's underweight on energy, materials, utilities, as well as healthcare. And he believes that from here on it's going to be more of a stock pickers market. So bet on stock specifics, but to say that re-rating is on the anvil and expect new highs for the Indian markets in the months ahead, that's really a bold call coming in from Rhythm Desai.
Absolutely, and I mean he remains steadfast. I think his confidence is unwavering and remains very, very optimistic on the prospects of Indian equities. Thanks for bringing that up back on the table, Nimesh. We'll come back to you in just a bit for the street chatter. We do have to take a very quick break, but as we do that, here's a reminder to all our viewers. You can unlock a world of exclusivity, expertise and influence. Become a member of CNBC-TV18 Access, our premium members-only experience on CNBC-TV18.com. The membership includes access to CNBC-TV18's flagship events, interaction with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits.
You know, people often ask me why I left my steady job at the call center. I wanted more out of life. So, I launched my own startup. Do you want to know how? Then start up your own business as an LIC agent. You want it, we've got it. Great products, zero investment, leading organization, and unlimited opportunities. So are you ready? Now think big. Become an LIC agent.
Visit our website or contact your nearest LIC branch.
सर इन्हें क्रिप्टो करके लाइफ सेट करनी है पर कॉन्फिडेंस नहीं है
कॉन्फिडेंस चाहिए हाँ सर डिफ्यूज द बॉम्ब ऑल द बेस्ट डर लग रहा है नहीं आता था हलवाई है इन्होंने सीखा है इसलिए ये कॉन्फिडेंट है अगर आपको क्रिप्टो में कॉन्फिडेंस चाहिए तो क्रिप्टो सीखना होगा क्रिप्टो कोच CoinDCX लर्न करो क्रिप्टो करो
Crypto products and NFTs are unregulated and can be highly risky. There may be no regulatory recourse for any loss from such transactions.
Sir, try berry pulao. Too good. Good, no?
Hey, why are you giving him such looks? Ignore tips and use your own mind before you order. Lots of people give unsolicited stock tips. It can be dangerous. Study the company and the risk associated. Invest only after analyzing.
ये रोशनी का सफर दिलचस्प है
हम सूरज से सिर्फ बिजली नहीं बनाते हैं खुशहाली को देश के कोने कोने तक भी पहुंचाते हैं
ये रोशनी का सफर
अदानी हम करके दिखाते हैं
रिटायरमेंट प्लानिंग के लिए तेरा SIP के बारे में क्या ख्याल है
रिटायरमेंट अभी तो पूरी लाइफ बाकी है यार
पर तुझे नहीं लगता अगर रिटायरमेंट के बारे में अभी से नहीं सोचे तो आगे जाके प्रॉब्लम होगी
पर रिटायरमेंट के बारे में सोचना क्यों है इतना जरूरी? जब तक आप रिटायर हो जाएंगे महंगाई काफी ज्यादा बढ़ जाएगी और आपकी इनकम वो तो रुक ही जाएगी। इसीलिए आज ही म्यूचुअल फंड्स में SIP शुरू कीजिए और हर महीने थोड़ा थोड़ा करके धन इकट्ठा कीजिए एक कंफर्टेबल रिटायर्ड लाइफ जीने के लिए। अधिक जानकारी के लिए अपने वित्तीय सलाहकार से परामर्श करें। LIC म्यूचुअल फंड द्वारा निवेशक शिक्षा की एक पहल। म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है। योजना से संबंधित सभी दस्तावेजों को ध्यान से पढ़ें।
Welcome back. So the market's been holding on 157, 158 points up on the Nifty right now. As always, it's been a very, very busy day, of course, for earnings as well. But as always, Hormaz is here with the buzzers, earnings and beyond. Let's take a look at what he has on his board today. Hormaz, over to you.
Well, some interesting names coming up. Firstly, from the IPO space, we have JSW Cement's issue opening later this week. And in light of that, Shiva Cement saw a very sharp spike just a few minutes earlier. The stock was up almost 9% and has now cooled off from those levels. But the volumes have seen a bit of a spike as well. Almost 7.5 lakh shares have already been traded on the stock compared to its 20-day average of just over 2 lakh shares. So that's a volume mover and a sudden one at that. Endurance Tech is the other one on the auto ancillary space. That has snapped a 2-day losing streak today, 7% higher on the stock and volumes 7 times of its 20-day average at 3.5 lakh shares compared to just 50,000. And this is the third straight year when the stock is delivering positive returns, at least as of now. On the downside though, Advanced Enzymes has snapped a 5-day gaining streak, was up every single day last week, seeing some profit booking today. It's the biggest single day fall, this 8.5%. One is since November of last year, and we have already had 15 lakh shares traded in over the compared to a 20-day average of just 4 lakh shares, and in 4 out of the last 5 years the stock has delivered negative returns. Now Neogen Chemicals was an earnings reaction as well. Last week came out with numbers, is down almost 6.5%, and 6 out of the last 7 sessions the stock has been lower. Not a very highly traded stock. It's 60,000 shares traded so far compared to a 20-day average of 15,000, and it's already down 35% on a year-to-date basis, which is the worst calendar year return since it listed almost a decade ago. And there seems to be no respite for Dream folks, and it's down for the 6th straight session today. Almost 1.5 lakh shares traded compared to a 20-day average of 6.3 lakhs. So this fall is coming on lower volumes in today's session, and from its 52-week high of almost well over 520 rupees, the stock has corrected well over 75% from those levels. So no respite for Dream folks, but there are some earnings reactions on the positive side as well.
Okay, absolutely. Dream folks, Dream not so great, at least for the time being. Thank you for that. Always an interesting list to look at, Hormaz. Well, let's welcome in our next guest on the show. Sunil Kaul, Global Emerging Market Equity Strategist at Goldman Sachs, is joining in. And like I was just telling you from Sunil's latest note, some of the headlines on earnings, they perhaps look not that negative. Sunil, great to have you on. Thank you for joining in. As we started the show, I was just giving viewers some of the highlights. Out of the 90 MSCI India companies that have reported, you point out in that note that 39 companies have beaten estimates, 44 have missed estimates, and the misses are not like by a huge margin. They're like 1-2% misses. So that gives a sense that yes, this has been a subdued first quarter, but not a washout one. You tell us, what's your summary of the earnings, the management commentary, the read-through so far?
No, I mean, you're right, Surabhi. I think the numbers are holding up much better. I mean, to be fair, I think they're in line with what we and the consensus were expecting. I think we sort of came into the year thinking that earnings growth will be 10-11%. And so far, I think that's what it is tracking, around 10% year-on-year profits up for MSCI India as a whole. I mean, there have been sort of some, as you said, at the margin, a little bit more misses than beats, but on average, this is like 1-2% misses. So we would say it's largely in line so far, but it's kind of in line with expectations. And that's something we are seeing broader across the region, which is like consensus expectations have been sort of generally low, and the numbers are coming in sort of in line and meeting those expectations. So India, I think in that sense, has been kind of in line. The other bit, which is more important, you mentioned in terms of management commentaries, I think there is generally sort of more confidence we are getting listening to the commentaries that people are feeling more confident about the consumption recovery. I mean, I think there are at least 3 or 4 large FMCG companies that have reported that they are seeing slightly better mass urban consumption picking up, and I think that's an encouraging sign. It's not sort of broad-based, to be honest, at this point. I mean, in terms of the consumption categories, we're not seeing it as much in autos or durables or paints. But staples, for sure, I think so far it's been encouraging, especially the mass, urban, low-ticket item is clearly kind of seeing improvement, which has been our expectation. And it's good to see that coming through in the earnings season so far.
Okay, so that's great news. I mean, it's great news. It's a great silver lining to an otherwise very cloudy market sky, Sunil, because the market has been testing investors' patience, right? And there's very little good news. There's tariffs on one hand. We'll talk about that in a second. But what you're saying in terms of some, shades of recovery, mass consumption, etc., what does that? I mean, where does that leave us? So, is this an earnings pivot? So, should one be prepared for a much stronger second half and therefore maybe a market rally resuming, or does this just mean that at least we have a bottom in place? So, maybe a couple more months of time consolidation.
I think clearly the latter. I mean, it has been our expectation, Surabhi, as you know, I think last time as well, is that we are calling for an earnings cycle to bottom out a couple of months back. And we did expect the second half of the fiscal to be stronger. And I think, as I said, it's encouraging to see that view is starting to pan out. I mean, to be fair, multiples are expensive. It has been for a while, but it's very little. But I mean, in terms of our return expectations, we don't think the market can have further multiple expansion from current levels. And in that standpoint, earnings becomes the critical fuel for the market if it has to make more gains over the course of the next 12 months. And in that sense, the earnings cycle bottoming out firmly and possibly seeing recovery in the second half would be a good sign.
But that means, again, since you said it doesn't necessarily mean multiple expansion, what does that mean for overall, market price action? 5% flat, or just, go back to old highs? That's the best case scenario for this calendar year?
Look, I mean, in terms of our expectations, we are baking in 27,000 on Nifty on a 12-month basis. So that will take market to new highs. But that's from current levels, only 9% upside. And our earnings growth numbers are roughly around 11-12%. So we are baking in a bit of multiple compression in our numbers. But if you are right that the earnings do grow low double digit, that should take market higher over the course of the 12 months. And so we do think market goes back to highs. But I think the near term, we'll probably come to tariffs in a bit, but near term it's going to be a little bit sort of challenging given sort of the news flow around tariff, given not that great seasonality, not specifically for India, but sort of broader markets. And that probably means for the next few months, the market kind of range bounds in here. But as we get into festive season, we get sort of more clearer signs that things are kind of picking up. You could see a rally into the year and further gains there.
Sunil, now on the global piece as well, and I'm curious to know what you've been hearing from a lot of the conversations that you have, international clients as well. Because first it was the US market was, doing so well that you didn't want to go anywhere else. And then again, it was the US continued to do so well despite all the tariff headlines. And now the US is not doing well because of, let's say, the job report on Friday. But again, the futures are up because now you'll hope that the Fed will start cutting. So again, you go back and buy US assets. So this whole US exceptionalism, so far it's not ended. We've paid the price in terms of, lackluster FPI flows. What do you see ahead next couple of months?
Look, I mean, I would sort of push back on that a little bit in the sense that, yes, the US market has had a few sort of exceptionalism early in the year. People thought it's dead, and now sort of markets have gone back to all-time highs. But I think if you look at emerging market as a whole, we have had a pretty strong run despite kind of US equities going back to highs. I mean, emerging markets have rallied sort of 15% in the first 7 months of the year. That's the strongest it has done in terms of January to July performance in the last 7-8 years. FII flows, to your point, I think from the April lows, we have seen close to 40 billion come into the broader emerging markets. And obviously, India has been a bit laggard, partly to do with the fact that sort of growth was kind of still slowing and earnings were still in the down cycle, partly because of elevated valuations. But to say that because US has gone back highs, the entire exceptionalism story is kind of come back in terms of US, I think that's not entirely true. I think from our client conversations, we continue to see a lot of interest from clients trying to diversify away from US and trying to build up broader emerging market exposure, which is why if you sort of look at the flow data broadly, it's been 10 weeks in a row where emerging market funds are actually seeing inflows. And so I think we continue to see, therefore, momentum of people diversifying. India, unfortunately, hasn't been a large sort of gain from that trend, but we still believe that overall money will continue to come into the emerging market as a whole. And some of that will also trickle down into India. I think as the fundamentals improve, that should get us further inflows.
Yeah, that was the second part of my conversation, that even when people have diversified away from the US, they've been going to South Korea. And, there's always the China question because valuations are so great there. Yeah. But now with the kind of earnings that we just discussed, I mean, in the first part of our conversation, if we don't have more earnings disappointments, then do you expect FPI flows to pick up?
Yeah, we would certainly think so. I mean, I think for India, it is a growth story. I think given where multiples are, we do need, and that has been our view all along, we do need sort of earnings growth to come through. And I think now we get feeling a little bit more confident that is coming through in terms of consumption recovery. And that should be the fuel for FPI flows to come in, market to do much better in the second half of the fiscal as well.
Okay, so let's come to the portfolio call as well, Sunil. And I mean, you put out that stock-specific sensitivity analysis as well, because we have this tariff situation to deal with. And let's start with pharma, because on your list, obviously, there are a couple of pharma companies that are most vulnerable if we get further news. So from that respect, have you made any significant changes to the portfolio construct because of this whole tariff situation?
I mean, we have not made any major changes to the portfolio or the sector allocations. I mean, we have made some changes to our sort of headline numbers, both in terms of growth and policy. I mean, just to sort of make sure we're on the same page, Surabhi. So after the tariff announcements, we did shave India's GDP growth numbers a tad, sort of 20 basis points for this year, 10 basis points for next year calendar. So we're now looking for India growth a little weaker in terms of 6.5%. But at 6.5%, it's still going to be far greater than many other sort of economies around the world. And a large part of that is not because we think, I mean, these high tariffs will remain. We do think that there is a scope that they will be negotiated lower, as is the case with many other large trading partners US has had. But it's more the impact of uncertainty over the next few months till we get through that, which is we are baking in our numbers. We have also penciled in one further rate cut in our numbers in Q4. We don't think the RBI cuts in the August policy, but we do think that in Q4 there is a chance for RBI to cut once more. So that also would be helpful for equity markets. And then I think from the earnings standpoint, we already had baked in some impact of around 15% reciprocal tariffs, 25% on pharma. So that was already in our numbers, which is 11-12% earnings growth I mentioned. So we haven't made any incremental changes. But I would say, depending on where the final numbers land, every 5 percentage point higher sort of tariffs on India does put roughly sort of 1 to 2 percentage point incremental drag on EPS. And obviously, the sectors that are most impacted are the export-sensitive sectors like autos and pharma and sort of industrials and chemicals as well. The way we sort of look at it is not the direct first-order impact, because if you sort of looked at goods exporters, only 4% of the exposure is to the US and demand. Only 2% of the MSCI India sales actually comes in from the goods exporting sector. So the direct hit is actually not that huge.
Correct.
It's the second-order impact from growth slowdown, which will impact some of the sectors, which is what we are kind of baking in. So the sensitivities I just mentioned is kind of combining the first order as well as the second order.
And the second order. Got it. So Sunil, finally putting it all together, all things equal, tariffs, expectation of RBI cuts, etc. Right now, which are the top overweights? Where should the money go? Is it financials? So you mentioned consumers and the pickup in commentary on the consumer side as well. So just tell us, top overweights.
Yeah, I mean, the reason we didn't make any changes in our allocations is because we have been overweight consumption pockets, sort of staples, bits of discretionary, autos, and financials. And we have been underweight export-sensitive sectors like pharma, as well as industrials, for example. And I think that trend will continue. I think the market has started to price that already in the last sort of month or so, wherein we think both sort of consumer-sensitive sectors plus financials do much better than sort of exporters and the industrials, which also get impacted because of some export exposure, but also the ongoing uncertainties. And I think that sort of divergence within the market will continue in the near term.
Okay. All right, Sunil. Great conversation as always. Thank you so much for joining in and giving us a complete perspective on all the moving parts, including tariffs, the impending RBI policy, and of course, how earnings season has played up. And not too bad if you go by how Goldman Sachs is reading the numbers and the trends. Thanks very much for joining in. Well, with that, let's shift the focus back to the market, which is actually having a great start to the week. I mean, it's bulls in control after a long time. We've got Mangalam back, and he is looking at the FNOQs of the afternoon. Mangalam, what are you picking up?
Bulls in control. The market's at the high point of today's trading session so far. The important part, however, is that, it's done that in absence of the Nifty Bank. So if you look at the key indices, you have the Nifty, which has moved higher, 24,700 plus. You have the Midcap index, which is up 1.5%, making your portfolios feel a lot better. But we have the Nifty Bank, which is marginally in the red. So what is it that is taking the index higher? We have the metals pack and the auto pack, which have been doing well for the first half of trade. And thereafter is the IT pack, which actually, suddenly woke up from its slumber in the second half so far and has currently surged higher, 1.5% higher on that index. And that has taken the Nifty upwards of that 24,700 mark itself. India VIX, in the morning we were talking about how it spiked to around 12.26. Now it's cooled off. So that is a better sign for the bulls, because you don't want the Nifty moving higher with the VIX moving higher. The Nifty's moved higher and the VIX has actually cooled off from the high. So that's a positive. VIX cooling off from the highs tells you that there is put writing which is taking place. What does that imply? Support is moving higher. This morning, the 24,600 put was fairly well bid. Now, we have the 24,700 put, which is higher, or which is seeing a fair amount of writing in terms of open interest. So a premium of 100 rupees on the 24,700 put tells you the support for the Nifty has moved higher from 24,500 to around 24,600. Though on the way up, 24,750 call writers, for them to feel jittery, the market has to sustain at these levels, and that could lead to a further short covering pop. Though the important part for the bulls to track from here on would be the range between 24,850 and 25,000. That's where, there have been congestions in the past, and there is the technical, 20 and 50-day moving average up at those levels too. The put call ratio has moved from extremely oversold levels of close to 0.7, 0.75 to 0.95. that is good news for the bulls. And a lot of stocks are moving around as well. Post numbers, AB Capital saw a lot of long positions being added. So that's one stock I'm keeping an eye out on. The other one is Manappuram Finance, which too is up 7% in this market at a time when financials are not doing well, with a lot of long positions being added on Manappuram Finance. So looking very good from a bull standpoint, more so in the second half of trade so far than what it was in the first half.
Thank you very much for that. Slip into a break on that note. We'll come back and get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you a few BTST calls from our technical experts.
Aradhya Disposal Industries Limited, one of India's fastest growing eco-friendly food contact paper products company, is coming up with its IPO on NSE Emerge platform with a price band of rupees 110 to 116 per share. Issue opens on 4th August and closes on 6th August 2025. Issue lead managed by Khambata Securities Limited.
Sarah, this is your space, play it your way.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC-TV18 Market Central.
For your daily source of market intelligence and wealth creation, with a commitment to doing it right.
ये रोशनी का सफर दिलचस्प है
हम सूरज से सिर्फ बिजली नहीं बनाते हैं, खुशहाली को देश के कोने कोने तक भी पहुंचाते हैं।
ये रोशनी का सफर
अदानी, हम करके दिखाते हैं।
क्या आपको पता है VIP-शादी.com पे पहला कंसल्टेशन बिल्कुल फ्री है? क्या आपको यह भी पता है कि यहाँ मैच मेकिंग होगी 5 गुना ज्यादा सक्सेसफुल? रजिस्टर नाउ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, मैंने कहा ड्रीम में तो यही गलियां आती। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं, तब लगा कि लाइफ में ग्रो किया।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
Hey!
हो गया एडमिशन?
Yes, अब बस लोन बाकी है।
एजुकेशन लोन के लिए SBI रिलायबल है। कोलैटरल फ्री लोन्स, टैक्स बेनिफिट्स,
गर्ल्स के लिए इंटरेस्ट रेट्स, कंसेशनल एंड मोर। सबको पता है।
SBI एजुकेशन लोन्स रिलायबल है, सबको पता है।
लखनऊ के लिए जाने वाली अवध एक्सप्रेस प्लेटफॉर्म नंबर 2 पर आएगी। गोवा के लिए स्टार क्रूज प्लेटफॉर्म नंबर 2 से ही जाएगा।
ये सब आपको एक प्लेटफॉर्म पर मिले ना मिले, पर शेयर इंडिया प्लेटफॉर्म पे आपको इक्विटीज, डेरिवेटिव्स, कमोडिटीज, इंश्योरेंस, म्यूचुअल फंड्स और एल्गो ट्रेडिंग एक साथ मिलेगी। शेयर इंडिया, डाउनलोड द ऐप नाउ।
Investments in securities markets are subject to market risk. Read all related documents carefully before investing.
Welcome back. Still holding on to that 24,700 mark, 150 points higher. But let's get a sense on what's happening in the dealing rooms and what the chatter is. Nimesh is now joining in, as always. Nimesh.
Hi, Rimana. A decent pullback, and I guess it's largely from an extremely oversold levels. The PCR at close to 0.7, 0.75, the long short ratio at almost 90% of the short side. It normally indicates a bit of a pullback, and that's what is played out in today's market. So large part of the rally seems to be more of a short covering rally, especially in the FNO names, and we can see the big moves in those stocks today. From a flow perspective, again a mixed day with a negative bias. So my sense is there's going to be a small MOC sell basket at a leading Friday. So last 30 minutes you can see some reactions in some individual names today. In terms of sector which are helping to pull back, IT, financials and metals are the sectors where you're seeing a pullback, and that's helping the Nifty to hold on to the current levels. From a technical point of view, I guess 24,350 is a level to watch on the downside. If that gets taken out, you could see further selling pressure in days to come. But on the upside, 24,950, 25,000 is a big resistance as well. So we've been in this range for a while now, and looks like that's going to be the trend. It has to break on either side for a decisive move. But for today, the sense is the pullback seems to be largely from extremely oversold, and thanks to short covering in many of the FNO names.
What about stocks?
So the first stock on my list is PSP Projects. That stock is down 13% last I checked, and on very large volumes. I guess the numbers were weak, but again, there is an anticipation of a large block coming in PSP Projects very soon. So that's the first stock. The second couple of PSU names where there is delivery-based selling, SBI and GAIL, both stands out in terms of very aggressive selling from larger FIs in today's market. Surprisingly for SBI, while there is selling, there was an upgrade as well from HSBC over the weekend. And the last is Indian Hotels. Small buying has emerged after the recent correction in Indian Hotels. So expect high delivery volumes, and understand some domestic mutual funds have started accumulating Indian Hotels at current levels.
Thank you very much for that. TBO Tech seems to be slipping post the numbers. The company's delivered a revenue growth of 14.5%, but margins have come under pressure. Margins are down to 14-15% compared to about 18.5% in the prior quarter. So the stock is under a bit of a pressure. And even the revenue growth of about 22.5% is less than the kind of revenue growth that it had last year, which was nearly about 25%. But Q1 was a tough quarter, with the India-Pakistan, and generally there was so much upheaval with Turkey. And maybe as a travel platform, TBO Tech also got impacted. But margins, 14.5% versus 18.8%. Mitesh is now with us with a few, BTST calls. Mitesh?
Yeah. I think Grasim and Pidilite are the stocks which are on radar. Pidilite, I would recommend taking a BTST with a stop just below 29.35 for targets of 29.80-85 for tomorrow. And the other one is Grasim, as I said, take a BTST here with a stop below 2775 for targets of 28.15-20.
Thank you very much for that. Let's get to Ather Energy. Very strong top-line growth reported, more than 70%. The stock today is at about 386. The issue price was 321, so comfortably above that. But for a fine print on the numbers, Sudarshan now joins in.
It's a steady set of numbers from Ather Energy for Q1 of FY26. If you talk about the bottom line, losses have narrowed not only sequentially but also year-on-year. Loss in Q1 FY26 has come in at rupees 178 crore versus loss of 183 crore in the same quarter last year and versus rupees 234 crore in the last quarter. So sequentially as well as year-on-year, losses have narrowed. Second parameter is revenue. It was led by healthy volumes that company has seen. Sequentially, volumes have increased by 1 to 2%. But if you take a look at YOY, volumes have increased by more than 2.5 times. That has helped basically big surge in the revenue, where revenue has grown by almost 80% year on year. Now, coming to EBITDA loss also, this quarter, it has come at rupees 134 crore versus 127 crore in the same quarter last year. But on a sequential basis, even EBITDA losses have narrowed. Now, recently, even two brokerages had come out with a note. Nomura and HSBC, both brokerages had initiated coverage on the stock. And even from current levels of around rupees 380 to 385, they are expecting an uptick of almost 20%. But as far as earnings are concerned, very steady set of earnings from Ather Energy.
Thank you very much for that. Anand Tandon is now joining us on the show. Anand, broadly, how has Q1 shaped versus your own expectations? Because we were just looking at the Motilal Oswal estimate. They're saying out of the Nifty earnings so far, the actual growth has been 7.5% versus their own estimate of, I think, 5.7%. So not bad all in all, Q1. For you, which were the standout performers, and have you been making any investments based on the earnings performance and the expected trend?
Well, I think what has happened is that this year the earnings expectation were a little more muted, even though if you look at the expectations in January versus now, the consensus earnings for Nifty were supposed to be growing at 15%, and now they are in mid-single digits. So there has been a sharp deceleration in the expectations. The challenge I see is that while most people are saying that the next quarter or the second half will be better, we are also looking at a situation where most of the fast-moving economic indicators are showing a slowdown. Given what we are seeing in the macroeconomics and the global markets. And more importantly, if you assume that the inflation trajectory remains low, you will also see a slowdown in the nominal GDP, which will automatically mean that if you've got, let's say, a single-digit nominal GDP growth, it is very difficult for corporates which are growing, let's say, at 10% to actually show very high profit growth. So net-net, I would imagine that, depends on where you started from. You would expect to see only a single-digit earnings growth on the Sensex companies even in this current year, which means that, with the kind of valuation that we are at, we are still somewhat stretched. Now, if you look at where the numbers are, clearly, for example, two-wheelers have done better. and while one is attributing it to rural recovery and so on, it does look like it is a higher priced items which have done reasonably well. And of course, in the case of Hero, also been helped by a sharp increase in EV sales, etc. So there are pockets which have done reasonably. But overall, I don't see a major difference between what was expected, at least for the first quarter. And I think the street is still ahead of expectations in terms of factoring in the kind of slowdown that we are seeing in the economy for the full year.
Okay, all right, got that point. Stay on with us, Anand. We'll have more questions in just a second. Let's look at more stocks that are catching the eye this afternoon, and AB Capital is definitely one of them. It's up almost 9-10% after the first quarter numbers came out. Let's take a look at the fine print. Gaurav is here with the details. Gaurav, what's the buzz? Big performance from AB Capital, the stock that is at least.
Well, yes, when we look at AB Capital, we saw strong performance, and this was across the business segments. So first, let's look at the consolidated numbers. Net interest income there increased almost by 14%. We saw operating profit increasing just by 10%. But on the other hand, when we look at profit, that increased almost by 13% on a year-on-year basis. And this was because of the strong asset quality that the company showed. When it comes to AUM, there also we saw a very big positive surprise because it grew almost by 22% on a year-on-year basis. And this was specifically led by business loans, which grew almost by 25%. Even in this business loan segment, the secured segment is something which drove the growth. And at the same time, when we look at disbursements, there also we saw 18% of a growth on a year-on-year basis, which was not anticipated by the market. Specifically from the segment-wise, when we look at the NBFC segment, now net interest margins, they have declined almost by 10 basis points. We saw a little bit of uptick in credit cost, but even after that, we saw ROA is actually improving, and this was because of the cost efficiencies that the business shown. For housing finance also, the ROA is increased almost by 15 basis points on a sequential basis, and specifically from the AMC business, they delivered profit growth of around 17% on a year-on-year basis. So definitely a strong set of numbers across the business segments, and as a result, we saw the stock performance also, it hit its upper circuit, and even after that, we saw the stock was soaring up in trade today.
Okay, all right, Gaurav, thanks very much for that. We'll, of course, keep that on the radar. AB Capital definitely doing very well in today's trading action. Take a quick break. We'll come back with more in just a bit. And a reminder here, do remember to tune in to the all-new CNBC-TV18 Prime lineup, bringing you insights from policymakers, business leaders and economists shaping both the world's and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC-TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and at 8:30 p.m. we bring you the Global Lens.
म्यूचुअल फंड सही है प्रेजेंट्स निवेश का सही कदम इन एसोसिएशन विद न्यूज़ 18 नेटवर्क.
Investments are a strong foundation of your future. They make you more empowered so that you can spend the money the way you want. Hi, I am Jyotsna. I have been an educator. I have taught children in schools and I've been a principal also. This job taught me so much of patience and so much of discipline that now I realize that same discipline and same patience is required for our investments also. I truly believe that when you invest in your health, like you do yoga, regular exercises, or whatever physical activity you're doing for your health, it gives you results later on. As we are patient with our health, with everything in life, we have to be patient with our investments also. The mutual funds, they have given me so much of financial independence that I have become more empowered with the returns what I am getting. Every drop makes an ocean. So start it today or tomorrow, but not latest by day after tomorrow.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड सही है प्रेजेंट्स निवेश का सही कदम इन एसोसिएशन विद न्यूज़ 18 नेटवर्क.
Play it your way.
Sarah, this is your space, play it your way.
Presented by Standard Chartered.
फिर वो वाले फिटिंग्स नहीं चलेंगे, सिर्फ वो वाले चलेंगे। किचन फिटिंग्स बाय ओसवाल्ड makes the world go.
Aradhya Disposal Industries Limited, one of India's fastest growing eco-friendly food contact paper products company, is coming up with its IPO on NSE Emerge platform with a price band of rupees 110 to 116 per share. Issue opens on 4th August and closes on 6th August 2025. Issue lead managed by Khambata Securities Limited.
Welcome back. In conversation with Anand Tandon, and we've got about 5 minutes to go before we wrap out on what's been a good trading session for our markets. We've rebounded from last week's levels, 160 points up on the Nifty right now. Anand, ABB is the big miss of the day. We've seen the shares decline. In fact, they've plunged close to about 6%. Net profits are under pressure. The street is going to watch out if that monetization comes through. But ABB, what is your view?
Well, all that entire sector has a good order book and so on. So there is nothing particular that you can argue other than the fact that all of them are extremely expensive. So if there is any kind of miss, you should expect to see volatile reactions. I think the more interesting set of results were from the logistics space. I mean, if you look at the ports as well as some of the logistic companies, they have done, perhaps better. Now, the only question is whether it is sustainable or whether it is a reaction to a possibility of some kind of trade impact, and therefore people having accelerated movements. But if it is something that sustains for a long time, that could be something that could be interesting.
So which ones? In the ports, is it Adani ports or is there any other play that you would look at?
Well, there aren't that many private ports that one can look at. Clearly, Adani is by far the biggest, so that would be something that would be worth looking at.
In the past, you've looked at the textile space very closely. Now, the tariff situation has questioned India's competitiveness versus some of its neighboring peers. What is the call now on Indian textile makers?
I don't think it's substantially any worse. I mean, at the end of the day, Bangladesh, for example, always had a better positioning vis-a-vis India. And now that has come back to the same kind of levels. The only challenge now is that Bangladesh itself is going through political turmoil, so that may be a much less attractive place for people to be buying stuff because there will be likely disruptions in the supply chain anyway. So from that point of view, I would argue that there is still an incremental benefit to India, given the more stable outlook that you have from the market here. However, the tariff advantage that one was looking to get perhaps may not play that important a part.
So is textile a part of your portfolio?
Well, I mean, it's something that is not something that makes a huge amount of money. So it's not necessarily that I would be buying any of those stocks. But as a sector, from an allocation perspective, maybe you could look at that as a potential investment opportunity.
Anand, the IPO market is also fairly active. The Knowledge Realty Trust, so a REIT is opening tomorrow. It's sponsored by Blackstone. So that issue opens tomorrow. So today we had the JSW Cement holding their press conference. The valuation is approximately 20,000 crore. Have you been participating or would you advise participating in any of these IPOs?
In general, I think IPOs are always overpriced. So one should be really careful about which ones one wants to be participating in. But then rather than looking at just IPOs, there are any number of companies which are already listed in each of those spaces. So it is perhaps as good as if you really like the space, you might as well buy something that is existing. There is hardly any valuation gap that exists nowadays from the IPO to the secondary market. Why take the risk on something new?
So tell us some stocks that you like now.
Well, that's a difficult question for the simple reason there isn't anything in the market that looks undiscovered or cheap. By and large, the market is more than fully priced. So it's now a question of whether or not you are willing to look at a 2-3 year time frame and therefore are really betting on something which the market is not willing to price in today. Even if you were to take that view, I would imagine that many of the stocks that would be looking at, for example, you look at the the Swiggies and Zomatos of the world, for example, which are local favorites, the chances are that you may find that the growth there may actually even off and perhaps slow down. So some of the valuations may be a bit more challenging. At this stage, I think the best way to play the market is just ride the momentum and be invested in a broad set of sectors.
Okay, all right. Well, we'll take that advice on board. Thank you very much for that, Anand. Good conversation as always. Thanks for taking us through today's action and a lot of the interesting stocks. It's been an interesting day. It's been a good day, actually, for the bulls. You'd have to say after a very, very long time, they've managed to see green and they've managed to hold on to green. And look at the screen right now. It's a trending up day. I mean, not too much, but 160 points, ending pretty much at the highs. And the mid-cap screen is looking even better. Look at the mid-cap index. It's up about 1.5%. And the advance decline ratio finally in favor of the advances today. So let's recap what's been a very solid session, particularly for the broader markets. On the Nifty, actually, if you look at the gainers, Hero Moto charging away with those solid numbers, monthly sales numbers coming in, looking very, very good. 5% up on that stock. Some of the global-facing metal names like Tata Steel and Hindalco, they did well today. Tata Steel was up 4%, Hindalco up 2.5%. Then you had names like BEL, which had takers. Actually, on the metal side, I didn't mention JSW Steel. Should take that in as well. Very strong day for metals today. 3% up on JSW Steel as well. Then there was some buying in tech names. HCL Tech, Wipro, TCS, Tech Mahindra, coming back from beaten down levels. Many of these names. And today was not a great day for banks. It was a better day for NBFCs and non-banks. For instance, Shriram Finance, SBI Life, Jio Financial. So the non-banks had green. The banks were actually the only disappointment today. HDFC Bank almost 1% lower. ICICI Bank 0.5% lower. Maybe some nervousness ahead of the monetary policy announcement that comes in on Wednesday. Bell has gone, but not a bad day, and even better, Rima, when you talk about the broader market.
Indeed, so many big movers and so many volume-led action seen today. So just to quickly recap some of the closing levels, Ather Energy 20% up, Peninsula Land 13%, Aditya Birla Capital, very solid set of numbers. Stock is up nearly about 11%. Delivery, again reacting to numbers, good volume, 7.